like I was just really amazed of that and how he'd break it down, and then how available he is and explaining all the trades he does. Um, so and I barely joined this group this year, so I have about 5 months now, and so I feel like I've definitely learned a lot from just the short amount of time I've been here. Um, and I would say definitely having that patience because I think when I first tried to do trading, I in my mind I always thought about like, oh, I just want to make this money quick and everything, but it's definitely a lot of patience and it takes a lot of skills. It's not really just easy like that. Yeah.
Ooh, man.
Mhm.
See, I'll tell you, man, that you guys are about to make me cry, dude. You guys are. Don't worry, I'll pay you guys later, right? So thank you for saying all those nice things about me. Yeah. You guys are awesome, bro. That makes me so happy. Last but not least, bro, I want to introduce you to my business partner, Chris. I know he's just kind of getting out from running his day, and I'm grateful that you could join us, bro. But Chris, my man, this guy is somebody that I literally met on social media, bro. Literally, we became business partners and good friends from social media, from a distance. I never even knew him personally. And then I flew out to California not that long ago, and we actually finally got to meet in person, and we just kicked it off, man. This is a brother that I just felt in my heart like we were gonna do big things together. And long story short, with that, yeah, we partnered up. We decided we want to hit the teaching game hard. We traded together. I taught him a few things. He taught me a few things, and we just grew together, man. And I've seen this guy's growth over that time frame that we've been friends and business partners, and here we are. Chris is such an amazing guy for me. Like this guy's like blood. All my guys are blood to me, bro. These guys are brothers. Uh, but just Chris, like I just resonated with this guy. I feel like I could talk to him about anything, but every time we're on the phone, bro, that's all we do is talk markets. Like that's all we do, bro. Talk markets, talk about life, different things. But our conversations just always gear about our passion towards markets. And like Sal said earlier, dude, you can hit me up at any goddamn day, a fucking Saturday when the markets are closed, and I'll be like, yeah, bro, let's talk markets. Like that's just what we do. It's just my passion. This is an identity. So, Chris, man, let me ask you. Oh, but by the way, before I wrap that up, yeah, Chris, man, like you started off, bro, just learning stuff online from people that, this stuff just was not working for him. And by chance, he happened to reach out to me. He followed me on Instagram and he started to see that I was very consistent with my results. I would post my P&Ls, my trades, my pre-analysis, my live trades, and then the post-mortem analysis. And he liked what he saw, and then he reached out to me. We stayed in touch. Then I taught him a few things, and this guy's balling, bro. He started what I really love and appreciate about Chris. He's a very very intelligent and humble guy. Those two things, bro. If you're smart and humble, oh my god, man, your life is gonna fucking move in a different trajectory. Because the problem with smart people, they're not humble, and the problem with people that are not humble, they're not very smart. Those two things don't go hand in hand, but when they do, when they go hand in hand, I'm telling you, man, you're gonna get a motherfucker like Chris, somebody that's very sharp, somebody that's just very adaptable, and somebody that if something's not working for him, he's gonna learn what is, and he's going to apply it. And yeah, I started seeing the results that he was generating, and this guy's killing it. He's making a lot, he's making a lot of money, bro. This guy's he's a killer in this business. He's a strong killer. I mean, hell, he even has his own little section over here, Polar Plays. So check that out, man. He posts his own ideas, and
Yeah.
yeah, it's the same things that we teach, bro. Like at the end of the day, man, one of the things that I want you to understand, we're gonna always keep things within the preservation of our process, our methodology. But most of our guys are gonna utilize it in their own way. And Chris certainly does it in his own way, and he's very smart in that respect. So, but Chris, man, I want you to give our new member kind of an insight of your time with me. Be honest, bro. How is it that you feel about me? Do you feel that we preserve a lot of principles and morals in our Discord, and do you feel like I'm scamming a lot of these people? Because Fabian here has a few concerns and doubts. We were on the phone, but very 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 cool guys. Just I want him to feel like he's at home. This isn't just another Discord. This isn't just some guy on the internet trying to take his money. Explain to him what your experience has been with me, how we met, things like that, and what your perception of me is, so to speak.
Yep, nice to meet you, Faven. Nice to
Hey,
see
you
you
too.
join us. Yeah, I mean, like Dave said, we met online and we just clicked. But Dave is already pressed you on the things we teach and stuff like that. But I think this group for me necessarily what I like to see and see the guys pick up is like how trading uh mirrors your personal life. Like me and Dave, we're not just professionals in trading. Any little thing that we get into, physical shape, anything like that, we drill it hard. Just anything in general. So the aspect that I learned a lot from Dave is to hold yourself accountable and professional in every aspect of your life, and you'll see how your trading performance starts to mirror your personal life.
Yeah.
Um, so for me, I think that's the best thing that you could pick up from this group besides trading, because at the end of the day, you're gonna learn so much in 1 month for a subscription of $89, and I guarantee if you take any of our plays, you'll probably make that on your first trade. Um, but you're gonna see that you're gonna pick up things that have nothing to do with trading. You're gonna see how me and Dave are. The trading is our life, and this is all we're gonna do. We're very passionate about it. We'll talk hours on it, but you're gonna see how our personal life also mirrors our trading, how we handle ourselves like professionals. So for me, that's what I like to see. And I met Sal in person. I'm starting to see Sal the same way that I saw myself when I met Dave, where he's starting to pick up farther than trading. He adds everything he learns from trading to his personal life, that you have to hold yourself accountable, because it's unfortunate that people who don't have groups of just people who trade or do similar things don't have the right mindset of life and stuff like that. So I always drill with Dave that what I picked up the most is how I grasped everything I learned in life with trading, and I apply it to everything now in life. Literally every single thing. I try to make sure that I'm doing everything in a professional manner, down to just everything. And I think that's for me the biggest thing is seeing these guys adapt and grow and go further than just trading.
Hell yeah, man. Hell yeah. I love that. Thank you guys so much for sharing, man. Fabian, I hope that this little conversation that we had with most of our guys was insightful for you. I hope that it put you a
Yeah,
little bit at ease. And I
yeah.
really hope to see you as part of the family. Like I said, man, my deal to you was, since you were a little bit skeptical in joining us, my deal to you was I'm gonna let you test drive the Lamborghini before you purchase, my guy. So
That's
I
true.
hope that yeah, these conversations were insightful for you, and we hope to see you as part of the family as soon as tomorrow. So yeah, we're gonna get into our training, so you see that what we're about. I don't want this just to be a chit chat about people. We're all blowing smoke up each other's asses. No, no, no. But we're gonna get into our training, so you see that we're fucking about, and that you see that we actually know what we're talking about, man. So I'm gonna get straight into it, man. Thank you guys so much for sharing. Like I said, I'll pay you later for saying all those nice things about me. But let's go ahead and get to fucking work, man. Chris, I hope you're
Mhm.
recording this, man, because we're gonna be gunning through some goddamn information.
Yes,
So
sir.
all righty. I appreciate you guys being here. We're still short a few people, but it's all right, man. Those who could make it is who could make it. Let's just focus on that. I am going to basically break down, Fabian, the essence of everything that we do. I want you to, if I just had to teach a goddamn baby this, if I were to just take a noob from A to Z, this is what we do. This is how the markets function. I'm going to teach you a lot of the elements that go into trading. Like I said, I need you to come in with an open mind, bro. Everything that you learned, all this ICT bullshit, whatever, throw it out the door, bro, because I promise you, when you learn what we have to teach, I can't guarantee many things in life, bro, but I can tell you this. If you literally learn what I'm going to tell you, I promise you, you will start making money as quick as a week. A week, 2 weeks max, and you will make enough to cover your subscription for the month and possibly even more than that. So let's get straight to work, guys.
Quick question for you, Fabian. How long do you
Uh,
have trading? I missed the beginning. I'm sorry.
yeah, Fabian's been trading about 4 months, bro.
Got it.
4 months.
Just want to get
And
an
he
idea
reached
of.
out. Yeah, reached out to me on Instagram today, and yeah, we just had a little consultation. I gave him a
Funny
call,
thing
and I
is,
just
like before I reached out to you, it was crazy. Because when I got up today in the morning, I wasn't feeling good. Because I slept, and then I had a soccer practice yesterday, so I was pretty much beat. I was just tired. Got up. I didn't have Instagram. I was looking on YouTube. I watched like 6, 7 videos. Spent like 5 hours on my computer. and then something was just like, just go on IG, type in a trader mentor or something like that. Then I saw you, so I was like, oh, you got less subscribers because a lot of mentors and people are trading that I've seen, they have a lot of subscribers and all that. And with them, it didn't really quite work out because every single time I get the courses, I'll get their stuff. It never really worked out. So when I saw your subscribers, count, I was like, oh, you got less subscribers and you got these things. Watch your stories. I was like, oh, this guy's balling. I had a good feeling
No,
about it. Then I texted you, and then that's when I texted you. You're gonna see that my Instagram has no profile. I'm like, because I did delete it because of trading, because I wanted to focus. That's why I
that's fine.
deleted my Instagram. So when I got back to it, the first thing I searched was a trader mentor, and then I saw you popping out. I was like, "Ah, you know what? Let me just text him. You
Algorithms are
never
working
know."
for me, baby. The algorithms are working for me, bro. I love that. So, I mean, did you come across a reel, bro, or did you just like happen to search like forex traders, and then did I come up on like the initial searches? How did that work? Did you find me on a
I
reel, or what's going on?
I just placed day trader mentor, and you were just there at the top. I didn't really have to scroll. I just saw you at the top. I was like, you know what? Let me click
Sheesh.
him. I
Yeah,
checked you
yeah.
out, and then I was like, you know what? Let me just go with him. You never know.
It's them hashtags, Dave. That's what it is.
Yeah,
It's them
I just
hashtags, bro. It's all the shit. It's all the work that I've been putting. Yeah. So here's the thing, bro. The reason I don't have a lot of subscribers is because, first of all, I tell a lot of the truth. I literally got banned from Instagram for like 3 days because I tell the truth. Like I shit on all this stuff, bro. I shit on all these frauds. I'm a very open, transparent person, and I seek and speak nothing but the truth. People like me, we're not very popular. And the people that have all these followers on Instagram, they usually buy them. They usually buy their followers, so it makes them look like they're these smart public figures. And then they sell you some bullshit course that doesn't work. I don't believe in courses, bro. Why? Because as I told you over the phone, courses are a very static approach to the markets.
yeah.
Just trying to say, oh, you just learn this and do this, and then this is going to be a result. It doesn't fucking work like that. What I have to offer, man, I promise you, you're getting far more than what you're paying for.
Yeah, and quick
Uh, I,
comment,
I, I used to,
Fabian, you're lucky you have a virgin mind in trading because honestly, having us help you expedite your learning curve, we're pretty much gonna just teach you the right things, and you get to avoid all the things that were necessary needed for you to learn. Because there's
yeah,
so
yeah.
much free information. The problem is this free information doesn't help you succeed long term or create some type of sustainability where you can make a living off of this. So know it's a good thing that you just started trading and you found us because you have a virgin mind when trading. You're going to be able to pick this up quick as long as you're willing to adapt and erase anything you've already learned.
Yeah.
And so know that you're lucky that you've only started trading.
Thanks,
Yeah,
man.
so as I said, we're all gonna be here for you, bro. I'm gonna be here every step of the way. I genuinely want your success. As I said, your $89 a month doesn't mean jack to me. But it's I feel like it's a fair price for what I'm charging. And in fact, I'm still undershooting because back then I was charging a lot of money. Like I was charging 2 grand up front for me to train you for a year. Not a penny more, not a penny less, but I started having a lot of successful months, and it's just been life has just been a fucking trip, man. So I know that people want to learn this, but they don't necessarily have the capital to invest in a skill like this. So I thought $89 enough, $80 $89 a month was reasonable. And as I said, I'm not popular because I speak the truth. And I said I've been blocked from Instagram for about 3 days because of that. So I have to be careful about how I conduct myself on there now. But yeah, the problem with a lot of these online Instagram gurus, man, is that they're all just flexing fucking Lambos and this and that, and then they just sell you a course, and that's how they make money. But I make money from trading first, and then I'm a teacher second. And I've already told you, bro, like I'm transparent. I don't make a lot of money from teaching. I make $800 a month from teaching. That's barely covers my Maserati payment. You know, like I don't make a living from this, bro. I make a legitimate living from fucking trading. I make bands, bro. Like you don't believe me, bro? Like not to fucking brag and shit like that, but this is what I fucking want for you guys. Look at this shit, bro. I want you guys to walk around with the annual fucking salary in your goddamn pocket and spend that shit like it's no fucking business tomorrow, bro. Because you know why? Because you know you're gonna make it the next day or that week. I can show you how to do that, bro. I'm not a millionaire yet. Keyword there, yet. But I've made multiple six figures from the markets, bro. Literally. Make this shit up, bro. Hundreds. You want that? I can show you how to get it. But you gotta fucking dedicate yourself to this. That's not to brag or to boast, man. It's just I'm trying to show you, because I know your concerns is you've already been burnt, bro. You spent money on courses that don't fucking work. You've lost a lot of money. I'm trying to show you I'm as real as I fucking get. You're not gonna find another motherfucker like me. I promise
Crazy
you.
part
Ask
is
anyone.
crazy part he carries that much cash with him all the time, which is kind of scary.
But Indiana's a gun-friendly state, so no one's gonna rob me, bro. Like you'd be stupid to rob me. You're gonna get clipped out, bro. But yeah, I don't condone violence or anything. But yeah, rest assured, bro. I walk around with like 10 G's in my pocket. That's fucking nothing to me. That's spending money. That's nothing to me, bro. And on top of that, it's just once you learn trading, man, it is the infinite money glitch. You're gonna pull money out of the market's ass like clockwork. So, anyways, we're done with that. Let's get to fucking work, guys, because I'm amped up, man. It's been a great fucking day. It's been a great week. Let's get to work. So, first and foremost, bro, we're gonna talk about the dynamics of price behavior. This is something that does not get taught because, like I said, most people don't even know how simple the markets are. Dynamics of price behavior. And if there's any misspellings, just disregard it. Like I said, we're not. I'm breezing through this shit as quick as possible. So the dynamics of price behavior. I need you guys to understand the markets can only do one of three things. They can either go up, they can go down, or they can go sideways. Now, when they're in a range, they can only do one of two things. They can either break out, pull back, and continue, or they're going to break out and fail. This is generally what we call a false break, or it is a form of manipulation. Now, I know this sounds simple. It might even sound fucking redundant and stupid, but trust me, this is all going to tie into our process and methodology in a bit. Price can only do one of three things. It can either go up, down, sideways, and when it's in a range, it can either break out, pull back, and continue, or it's going to break out and fail, and that is a form of manipulation, which we refer to as false breaks. Okay? Now, here's the caveat to that. There are several things that you could fucking call each and every single one of these things. It doesn't matter, man. Whatever floats your boat, whatever makes you sleep at night, you can call it whatever you want. You can call this a bull trend, a fucking upswing, an uptrend, an impulsive move. It doesn't matter. There's a million ways to call all this shit. Just know that the market can go up, it can go down, or it can go sideways. Same thing with the range. You can call it a range, top, consolidation, equilibrium. It doesn't fucking matter. It's just behavior. Okay? It's just price behavior. This is how the markets function. So now that we're equipped with that knowledge, you need to understand what our job is as professional traders. Well, our job as a trader is to analyze. In our case, since we're, price data analysts, our job is to analyze a price chart and analyze what happened prior, what is currently happening, to anticipate, keyword there, anticipate what is likely to happen. Our job is to analyze what happened before, what is currently happening, to make speculative bets on what is likely to happen. And the more intelligent, the more skilled, and the more experienced you are as a trader, all this will lead to higher strike rates, higher caliber trades, higher consistency. And I'm going to show you how to do that. So these are the dynamics of price behavior. Now, I'm sure you guys have been taught the same bullshit over and over, and this is important to know, but once again, I'm teaching you guys how to play chess, not checkers, but we're going to go over this for our new member because I think it's very important that we're all on the same page here. So there are what we call uptrends and downtrends. An uptrend typically in Dow theory, this is what, Dow theorists believe, that in an uptrend, you have higher highs, higher lows, higher highs, and then higher lows. That is the essence of an uptrend structure. As long as price is continuing to do that, you're technically in an uptrend. Same thing and vice versa for a downtrend. When you're putting in lower lows, higher lows, lower lows, higher lows, etc., you are considered in a downtrend. This is great and all, but here's the fucking problem about Forex. It doesn't work out like this. Forex is like you put a higher high, higher low, higher high, deep ass low. You break this structure, and then you put in a higher high, lower low, high. It's all over the fucking place because this market is so heavily manipulated. But thank God that it's manipulated, because if you can understand that it's manipulated and you can accept that, now you know how you need to play the game. A lot of retail traders, they're taught to play against the big movers of the markets. You're taught to trade against the trends. You're taught to trade against the waves. You're taught to trade against the money that is moving the markets as opposed to trading with them. What do you think is easier, going uphill or swimming downstream? Which way do you think you get to your destination faster? Do you think climbing up a fucking mountain gets you up there faster? You're climbing up the mountain with that fucking resistance? Or do you think swimming downhill gets you to your destination faster?
Down.
Yeah, downhill, right? A lot of people are taught to play the game in this manner when you need to be playing in this manner. Remember, checkers or chess. That choice is yours. But I'm going to teach you to play chess because I want you to fucking make money. That's what I want you to do. So that is the essence of price behavior. It can go up, it can go down, it can go sideways. When it's in a range, it can either break out, pull back, and continue, or it's going to break out and fail. That is all that price can do. Once again, just to recap, our job as traders is to analyze what happened prior, what is currently happening, to anticipate what is likely to happen. That is the artifice of speculation. We are gamblers at the end of the day. But if you treat it like gambling, you're going to get the results of gambling. If you treat it like a business, you're going to get the results of a business. Now let's talk about the holy trinity of trading, or our method, so to speak. So this is the holy trinity. And it stems from three things. One is timings. Second, levels. Third, behaviors of price. Plain and simple. Nothing complex. Nothing. This is not rocket science. This is not engineering. This is straightforward. So let's talk about timings. Okay? When it comes to timings, there are specific things that you need to understand about the market, my friend. The markets are very cyclical because they're manipulated. When there's manipulation, there's cyclicalities to the markets. And the cyclicalities stem from timings. There are specific times of day, which we call sessions. And there are specific days of weeks that are pretty much what we call templates. So sessions make up time of days. I want you to write this down if not, and if you don't write it down, it's cool, bro. We record this stuff, so you can always refer back to it if you need to. And there are specific days of weeks. So times of days are going to be referred to as sessions, and days of weeks are going to be referred to as templates. So let's go ahead and break this down in a little bit more detail. Times of days in the Forex market, there are three sessions where volatility starts to get injected into the markets. What is volatility? Volatility essentially is just a simple term to explain the velocity of the market, how quickly or how slow the markets move. If there is a lot of volatility, that means the markets are very chaotic. They're very erratic. If there is low volatility periods, the markets are very smooth, very calm. Ebb and flow, baby. Just calm, trending, consistent, not a lot of chaos. etc., etc. That's all volatility means, is the speed in which the markets move. So whenever there's volatility injected into the markets, it's done at specific sessions. There are 3 sessions in the foreign exchange market, bro. There's the Asian session, the Euro London session, and then you have the New York session. Every session is comprised of 4 hours of blocks, or blocks of times. Blocks of times of 4 hours I guess is a better way of putting that. 4 hours in terms of blocks. So every session consists of 4 hours, which is basically a 4-hour candle. That's all it is. It's a 4-hour candle. 4 hour here, 4 hour there, etc., etc. The Asian session commences at 8 p.m., 8 p.m., 8, 9, 10, 11. 8 p.m. Eastern Standard Time to 11 p.m. at night. The Euro London session commences at 3 a.m. to 3, 4, 5, 6. Actually, I guess you could say 7, because that's obviously 4 hours of block of time, but 3, 4, 5, 6. Okay? But we're going to leave it at 7 because that's essentially, a 4-hour block of time. 3 to 7 a.m. Eastern Standard Time. That's so important. Eastern Standard Time. And last but not least, New York session, 8 12. Okay? Asian session, 8 p.m. to 11 p.m. Euro London session, 3 a.m. to 7 a.m. New York session, 8 a.m. to 12 p.m. in the afternoon. All Eastern Standard Time. Now, here's the kicker. There is a specific hourly window in each of those sessions where there is massive volatility injected into the market. We call them hourly windows. There is a specific hour and where most of these markets are generally moving very, very quickly. So in the Asian session, it's roughly about 9 p.m. to 10 p.m. at night where you're likely to see some movement. So if you were trading the Asian session, which I don't necessarily recommend because it usually moves about 25 to 30 pips, it's not a lot of movement. It's not a scalable session, but the peak hour of volatility is going to occur at 9 p.m. to 10 p.m. The Asian session. The Euro London session is going to be 3 a.m. to 4 a.m. This is where there's going to be peak volatilities where you usually get those erratic swings in the market. All in a 1-hour candle. The New York session is generally 9 a.m. to 10 a.m. 10 a.m. Looks like you're writing notes down, bro. Are you writing notes down?
Oh yeah, I was.
If I'm going too fast, feel free to don't hesitate to ask questions. Don't hesitate to stop me or ask me to repeat anything, okay?
Yeah.
But I'm glad that you're writing those down, man. It says a lot. So this is what basically timings is. The time of days are sessions, and this is all you get in the foreign exchange market. This is so important for you to learn because I promise you this is going to tie into what we do. And last but not least, I promise you, man, I'm going to teach you our setup so you see how we make money. But I need you to understand this first. So now that we understand sessions, before I erase it, let me go to the restroom, write anything else down that you need to write down. I'll be back in just a quick minute, guys. I've been drinking a lot of fucking water. Give me a second. I'll be right back and take a little potty break if you have to, but give me a second.
Be right back.
Yo, what's good, Chava? Yo, what's good, Chava?
What's up, Polar?
Hey, regarding those two ideas you just sent me, they both look very good. Yeah, I like the way you drew out that second price chart. Because I think that's a possibility, especially it being middle of the week. So I think you're gonna get some interaction there. But that setup right there is our key buying setup where you have that geometrical higher high and higher high. Let me see if I can pull it up while Dave's on here.
But the thing is, it got invalidated already. I
Uh,
think.
let me see. Not with current price. You know, I said you also have a good idea currently at current price. I like your tight stop there that you have placed.
I gotcha. Yeah, I was thinking about entering here, but I think I'm gonna wait till tomorrow, bro. You've always said it too that we get deep pullbacks with that USD cut.
Yeah, that is very true. The thing is, I think we already got it with that nasty red candle on the 4 hour in the bottom.
Yeah.
But anything
Yeah.
under there, we have to readjust our our trade idea with the USD CAD because it can't invalidate that low anymore.
Yeah, most definitely, bro. If it takes that out, I'm fucking. Yeah, we gotta recalibrate. But there's so much news coming up for tomorrow, Thursday, and Friday. And I have a feeling, bro, that this shit is gonna take off all that liquidity that's those lower lows on the
Yeah,
higher time frames. Is gonna clean out all that liquidity, bro.
we're for sure at a pivotal point where you're gonna get some crazy movement in the markets where you get like fucking 500 pips in one session or something like that. Because it's been a while that we've gotten moves like that, and everything is every chart I look at,
No, you don't have to.
I continuously see a pivotal point. Um, I don't know if you see the same thing too, Chava.
On what chart? Give me. You don't have any specific charts?
Like the pound USD, it looks like it's about to fucking dump. The Euro USD looks like it's about to dump hard as fuck. USD CAD looks like it's about to blow up. Euro, like everything is either at, everything's a top play for me right now or a bottom play for me. So it's just scaling in, making sure that you don't enter in size where you could take any pushback. So the way you survive moments like this right now is really just scaling in, seeing how price reacts. Because you're very early anyway, so why even size up? If we're expecting all that liquidity to get taken out, like you're saying, you know. So just play things right by scaling in very small. The way I run one of our clients' accounts is like, bro, I don't even look at it, but it's non-stressful. But I have units already placed in the USD CAD that are underwater, but not enough to where I'd even care or I even look at it on a daily basis. Just keep scaling in as your idea continues to fold. So yeah, my best recommendation, Chava, is scale in right now, to a point where you're not feeling any pushback. So like you could have both your plays play out. You send me two charts with two ideas. Give it enough space where both your ideas could play out. Because realistically speaking, you're still trying to buy on both ideas. You get me?
Yeah, yeah, for you.
But I agree with you.
Alrighty.
I do think that the USD CAD is at a pivotal point, especially if you look at the bigger time frames. We're just trying to catch the our geometrical setups on the smaller time frames, which I see. For me, it seems that my strike rate is better when I apply my geometrical structures on the smaller time frame. It's tough to get it on the higher time frame just because it's so manipulated and you get those disgusting fucking candles.
Yeah, bro. Hell yeah, I agree. Like the whole point of why we do macro analysis is just to give us an idea of where these things are likely to go long term. But net, we're fucking day traders, bro. We're trying to make sure that we get in at very key moments, make our fucking money, stay the fuck out, and then when we see another opportunity within that trend, because it always provides an opportunity, we get it. But like doing the macro analysis on the dollar CAD, guys, I would not be surprised to see it go past $2. That's fucking insane. That confirms our dollar parabolic thesis that the dollar will see a super spike within the coming years. And that can get very, very fucking scary. It's going to affect the world in ways that we have no way of comprehending. But we're already seeing one of our funnels. It's already in breakout mode. It's already in breakout mode. It's basing out, and this is certainly not a sell week template. Like if it was a sell week template, price should have already sold off. At that point, I would have been very reluctant to hold the trade. But the fact that we got that massive bounce today and a very strong close lets me know that this thing is ready to break out again. And we have some short-term targets at the 1.4 and 1.427. What it does beyond that, I don't know if I'll obviously hold all the way to, fucking $2 or even 1.62. But at least short-term wise, I think we make these targets very easily. And then we might set up a period of progress decay. We might wind up for the next structure, and et cetera, et cetera. But the thing is with the dollar CAD, it's a very news and schizophrenic driven pair. So you kind of have to be careful when you trade it. But I mean, this structure just looks so goddamn good, man. It aligns with the dollar super spike theory that the dollar is going to continue. Like if you listen to Brett Johnson, bro, and his dollar milkshake theory, the dollar has all the edge right now. And if the world were to come to a collapse, the dollar would benefit from that. Interest rates going higher means a stronger dollar. The stock market dumping, if we hit an economic recession, which we're already in a technical economic recession, that means higher dollar. Why? Because if you sell your assets in panic mode, what do you think you're getting in return for selling your assets? You're getting dollars. The higher interest rates means it attracts better foreign investment. So there's going to be more demand for the dollar. If your country isn't providing yield, you're going to want to invest in our country. So it's just the dollar has all the edge. Whether things go fucking crazy or things get better, the dollar is going to win right now. That doesn't mean I'm pro-America or anything like that. That just means the dollar has the edge right now. The dollar is the global reserve currency of the world. They are not going to give up their power that easily. Not going to fucking do it. And they're going to do everything in their power to make sure that they maintain that status. And this structure is very much aligning with that thesis. So stronger dollar, in my opinion, and as long as we can trade with the macro prevalent trend, we're going to make a lot of goddamn money. This is very easy. This is just, we don't need to complicate this stuff. But obviously, because we're day traders, we need to make sure we're going in at very specific moments, key moments, locking in the money when we have the opportunity to do so. But yeah, that remains to be seen, man. I think the dollar CAD is going to be a phenomenal play if this structure is very much intact. I just don't like to trade higher time frame structures because you guys know that they're very heavily manipulated. We saw that on the pound CAD. Funnel is still there. Our funnel is very much intact, but look at this fucking dump that you got cleaning out all these stops before you got the actual move to our target. If you're trading leverage and size, you do not want to be fucking holding this type of trade, bro. Like, it will wipe you out. So that is why we have to take things day at a time, session at a time, week at a time, and then know when we need to add, cut, or hold our position. But these type of things, man, that's why I don't like trading macro structures, because they have a tendency of being heavily manipulated. As opposed to when you trade smaller time frame structures, they perform to target very, very well. But anyways, let's get back to our trading, man. We'll talk more of our setups in a bit, and we'll definitely discuss a lot of the trades that we're currently holding, just to see how we're going to, what we're looking to anticipate moving forward and how we're going to manage them very effectively down the line. But back to the session. Okay, so now we covered the time of days, essentially days of weeks that are going to be more volatile, more conducive to high probability trading. Give me just a second for the screen to load up. But Fabian, man, do you have any questions so far about what we just discussed? Is it kind of making sense? I know it's a little bit overwhelming, but I promise you, man, keep attending the meetings and all of this is going to make sense over time. But any questions so far?
No, exactly. I was just following through what you were saying. Just
all right.
Kind of listen.
A quick comment, Dave. I think you forgot to touch up on days of week. That's the only thing you missed out on.
No, that's definitely where I was headed to next,
Yeah.
man. I appreciate you for the reminder, but that's where we're headed to next. So we understood that. Now let's talk about days of week, which is another component and element to timings. Days of week. So there are going to be specific days that are going to be conducive to high probability trading compared to other days. And there's going to be specific days that actually where you start to see more significant movement than other days. So let's break down the trading week. The trading week, the markets open Sunday, 5 p.m. Eastern Standard Time. And then they close Friday, the foreign exchange market. Obviously, the equity markets close at different times and different operating hours, but we're talking about Forex right now. The foreign exchange market opens Sunday, 5 p.m. Eastern Standard Time and closes Friday, 5 p.m. Eastern Standard Time. That is essentially the full trading week. Now, out of that week, you're going to get specific things that happen. So let's break the week down into individual days. Sundays and Mondays. Sundays and Mondays are generally what we refer to as the opening range of the week. Opening range. The purpose of the opening range is to establish a session high or low or daily high or low. That's all. That's the purpose of the opening range. And the opening range commences on Sunday into Monday. Most of the price behavior that happens Sundays and Mondays are not for your benefit. Understand that the retail trader is going to come in with the mindset of, oh, dude, the market's open on Sundays, or, I'm ready to tackle the markets on Monday. Let's start, taking trades. Let's start risking money, etc. Whatever. Here's the problem with that. The markets know that. They know what you're going to do. So they're going to engineer price behavior to get you to bait you into risk capital to chase whatever's happening Sundays and Mondays. Sundays and Mondays are what we refer to as trap days or low probability trading days. We call them trap days because that's what they are. They're generally traps. The price action that is being generated and engineered before your very eyes is not for your benefit. It is the opening range. It's establishing a higher or low. So, say it puts in a low, you're chasing the market while it's trying to establish a low. And once that low is nicked, then it moves in the opposite direction. All the while, you're getting stopped out. You're getting squeezed out of your trade because it's forming a high or low for that particular day and session. And vice versa. Say you're trying to chase the market higher, and it locks in that high, and all of a sudden it starts going down. You're losing money. You're underwater. You're getting stopped out. We do not generally, on balance of probabilities, we do not trade Sundays and Mondays. That's one thing that I want you to understand about our process, bro. I understand that that's when the market's open, but that does not necessarily mean you need to be trading Sundays and Mondays. They're low probability trading days. That is, I promise you, you will lose a lot of fucking money consistently over time if you trade Sundays and Mondays. So we usually wait. Our trading week starts usually Tuesday. But that doesn't mean you need to lack patience, and that doesn't mean you feel like, oh, every trading day that goes by and I'm not trading, I'm losing money. No, you're not losing money, bro. You're being smart. You're being patient. We're trying to be snipers in here, man. We're not trying to be the fucking infantry that just gets sent out to the war zone and just guns blazing. We're trying to focus on quality over quantity. And then when we see our shot, we pull the fucking trigger. That's what we do. We're goddamn snipers here. So you need to know the terrain of your battlefield. Sundays and Mondays are low probability trading days. We do not trade them on balance of probabilities. There are some Mondays where if there's movement, yes, but normally we don't. Tuesdays and Wednesdays. Tuesdays and Wednesdays are generally establishing the high or low of the trading week. The high or low of the trading week. So let's say Sunday goes down, right? And then Monday opens up. It's trending higher. And then boom, there you go. Sunday put in that low, Monday put in that high. That's essentially the trading week. That is the opening range of the market. And then let's say Tuesday and Wednesday come along. Here's Tuesday. It's looking to establish a high or low of the week. In this case, a high. Tuesday comes around, stuck at that high. It's trying to trap volume. And then Wednesday comes along, boom, you get a news-driven event, you get a stop hunt, and then fucking collapse out to the market. You get a grind line break, which is what we're going to teach you in our method. And then you know that this is a high probability trading day to take a short. And vice versa. Let's say, Sunday puts in that low, Monday puts in that high, and then it starts trading lower. Tuesday, and then there's you get the low on Tuesday, and then Wednesday, you get another low, and then come Thursday, come back inside the opening range, and then boom, you fucking trend higher. So you get a grind line break, Tuesday, 1 push, 2 push, 3 push, and then you break outside that grind line break, and then you reverse, which is what I'm going to get to in a little bit in terms of reversal days. But Tuesdays and Wednesdays are generally establishing the high or low of the week. And this is what we refer to as trapping volume. Because more often than not, when you're trying to establish that high or low of the week, when you break out of the opening range, traders, higher time frame traders are going to get involved in those moves. Higher time frame traders, if they see that Monday's high has been broken, they're going to assume that, price is breaking out. Clearly, this is going higher. But that's rarely the fucking case. I need you to understand, bro. This is what I need you to write down. Over 85% of breakouts fail in the Forex market. Whether that's on a shorter time compression, whether that's on a macro time compression, 5-minute chart, daily chart, etc. Weekly chart, daily chart, it does not matter. The point is that 85% of breakouts fail in the foreign exchange market. So what does that mean? That means you need to fade strength and buy weakness. If the market is breaking out, you need to assume maybe this is not going to continue higher. If the market is breaking down, you need to assume maybe this is not going to go lower. But you need to wait for the market to give you the indication that it's not going to work out in that manner. So Tuesday, Wednesdays are establishing the high or low of the week. And then last but not least, Thursday, Fridays are what we refer to as parabolic trend days or reversal days. Thursday, Fridays are parabolic trend days or reversal days. Because we're getting close to the end of the week, the market needs to close. It needs to set and print that weekly candle. So it needs to close in a specific fashion. Now, it doesn't always happen that way, but on balance of probabilities, Thursdays and Fridays are generally parabolic reversal or trend continuation days. These are where you're going to start to get those massive fucking moves, bro. Massive moves. And if you're positioned on the right side of the market, you're going to wake up on a Thursday, Friday morning, and you're going to be like, God damn, it's payday already, bro. You're going to be up hundreds, if not thousands of dollars. You're going to be like, Jesus, I can't fathom that. Thursday, Fridays are trend continuation days or reversal days. That's that. So that is what we refer to as the weekly template. It doesn't always work out this way. That's one of the things that I want you to understand, bro. This is not set in stone, but on balance of probabilities, the majority of the time, this is how this market functions. Sunday, Mondays are the opening range. It's establishing a session high or low. They're trap days. You don't want to trade on those days. Tuesday, Wednesdays are establishing the high or low of the trading week. That is where volume is being trapped and generated. And then Thursday, Fridays, they either reverse the fucking market or they parabolically explode higher. That's it. It's that simple. And if you can stay within the confines of this template, you have to make money. And my guys are a witness and testimony to this. Guys, Sal, is this, what am I telling you? Is this not true or not?
Yeah, bro.
How many times have we seen this play out?
We see it throughout the week, man.
See it throughout the week consistently. we see and equipped with this knowledge, you now know what you need to do throughout the week. You can now formulate a method around this. So there's that. That is timings. Days of week, times of day, and then days of week. So hopefully we're at an understanding there, bro. Do you have any questions, Fabian, before we move on to the next segment of this training?
Basically, what you said about the days of the week, the times of the day, and the days of the week. Yeah, that was pretty. Yeah.
Okay. All right, super cool. As long as we understand, man. Like I said, feel free to pop in and ask a question if there's something you don't specifically understand. Now let's get to the second part of the Holy Trinity. Levels. Yeah, that was fucking nasty. Give me a second. Levels. So you need to understand what levels are. The only levels that matter in Forex, or really in any market, are at the extreme points of price or key round numbers. If you guys can see this, over here you have your price axis. Down here you have your time scale. Over here lets you know the price axis. And when you scrunch out, you start to see what levels are significant. In this case, the 1.1, 1.5, 1.2, 1.25, etc. When you scrunch closer, you start to see what levels are significant on a much more compressed view. But generally, what we teach you, which I'll get into a little bit right now, the only two important levels that matter are the extreme points of price. So if you put in a swing high or a swing low, you want to focus the bulk of your attention or your trading activity at the breaches of these extreme points. Why? Because I just explained it. Over 85% of breakouts fail. So more often than not, when you get a breach of a significant high, you're likely to reverse. And that is where setups could form. Same thing to the downside. When you breach that low, if over 85% of breakouts fail, what do you think is going to fucking happen? It's most likely to reverse. A lot of retail traders, they see a breakdown and they're like, oh, well, price has to continue going lower. Clearly, it's breaking down. This is what you're taught in basic technical analysis. No. When volume usually gets trapped at these low points. So rather than thinking like a retail trader, you have to reverse engineer the mistakes that they're making and reverse engineer your own mistakes. If I know over 80% of breakouts fail, I'm not going to try to trade with the breakout of that significant low because I know over time it's likely to reverse. I'm looking for setups, reversal setups at those lows. Promise you, bro, before we go to bed tonight, I'm going to teach you those setups. That way you have an understanding. But anyways, over 85% of breakouts fail. So you need to focus your attention at the extreme points of price. And then the second aspect of levels is key round numbers. Key round numbers. Round numbers. And it's going to be on this side of the price chart. You got your 1.25, 1.2, 1.15. What is so significant about those round numbers? Usually that is where institutional order flow is interacting. Round numbers, key round numbers, are where big institutions are interacting with their trades. That is where they are deploying their positions. You don't believe me? Let's go ahead and scrunch in. So this is going to be the daily time compression. And we're going to stay scrunched up. Okay? I want you to pay attention to these levels, man. There's that level. There's that level. There's that key round number. Key round number. Okay. Every time price interacts with certain extreme points at key round numbers, there's interaction there. There's something going on there. Look at that wick right there. Look at that breach. Look at that contact point right there at that key round number, bro. Look at that interaction. Same thing here. Price is going down. Interaction. Breached. Interacted there. Fail. Basing out. Tap that. Moved. Wick. There is something significant about key round numbers. What? We don't know. Our job is we don't have access to that information. We're retail traders. If you work for a hedge fund, maybe you'll find that answer, but we don't work for hedge funds. But what we do know is that key round numbers are significant. We know that big operators, the people who move the fucking markets, interact at key round numbers. Now, our job is to identify what is going to happen at those round numbers. And that I'm going to teach you a filtering process that's going to let you know what you need to do at those key moments, bro. So, but look how significant that is, man. Look, I can't make this shit up. Look at those interactions. Look how price is basing out at this round number right here. And then it moves, interacts there, and then it sells off. Something is significant about key round numbers. That is where the bulk of positions are going to get deployed, and that is where the bulk of big institutions are going to interact. So that's pretty much it. That is what makes up the secondary part of our holy trinity is levels, the extreme points of price, and key round numbers. And here you go. This is living proof and testament that most breakouts fail. So let's talk about the extreme points of price here. What does that look like? You have your highs, and then you have your lows. You're drawing your levels out, etc., etc. So there we go. You put in a high, a low here. You broke out. You failed and reversed. You tap that high. You reversed. You didn't necessarily breach this low, so that would have not been a good setup. Didn't breach that high. It's ranging. It breached this high where there is liquidity here. And look what happened. Price failed. And then look at this significant low. Price breached it and failed. And look at this significant high. Price breached it and failed. Over 85% of breakouts fail. You need to understand where these failures are going to happen at those particular moments in time. And I'm going to teach you that. But I just need you to understand the essence of what I'm talking about right now, bro. Over 85% of breakouts fail. So if you're going to focus on levels, focus at the extreme points of price before you ever place a fucking trade, because you will increase the probabilities of success. If you just focus on the extreme points and levels of price, you will increase your consistency as a trader. Hands down. Last but not least, behaviors of price. Well, guess what? Good news for you guys. We already covered that in the beginning part of this training. Behaviors of price are pretty simple. Price can only do one of three things. It can either go up, down, sideways. When it's in a range, it can either break out, pull back, continue, break out, and fail. Okay? All of this ties in with what we're going to teach you. Last but not least, let's talk about the players in the game. And then we'll get into the setups and how we actually make money. You need to understand the operators, the players in the game, man, because this is so important. If you don't understand how the markets function, who the players are, what rules you can play with, what parameters you need to stay within, you're not going to make money. You're going to lose consistently. So there are two types of players. There are big entities. Big entities, or what we call smart money players. Smart money players. Okay? Big entities, big operators, big institutions, whatever the fuck you want to call them, whatever. But there's smart money and then there's dumb money. Plain and simple. Dumb Oops, dumb money. Dumb money is essentially retail traders, guys like you and me, guys who don't have access to massive informational resources. We don't have the software. We don't work for hedge funds. We don't have a team of guys that are devoted to doing research. We don't have that edge over our competition. Unlike smart money, where bro, they have so much money they can pay they could have a whole fucking room filled with hundreds of people that are dedicated to studying the oil market, that are dedicated to studying the gold market, the crypto market, the corn market. We don't have that edge, but we can pay attention to the footprints they leave behind. That's what we do have. That's the edge we do have. But there's smart money and there's dumb money. These are the players in the game. Now let's talk about these big entities. You typically have there's a lot, man. This is why trading is so fucking hard, is because let's talk about our competition. You have the Fed, which I like to call the god of the markets. You have central banks. Central banks. You have hedge funds. You have corporate banks. You have corporations. And then last but not least, you have algorithms. This is our fucking competition. We're trading against the whole fucking world. Each and every single one of these players has their own objective and motive for interacting with the markets. The Fed wants to control inflation. They want to make sure we have a healthy economy, so they're going to interact with the market very differently. The central banks want to supply the money. They want to make sure there's enough liquidity in the markets. So the banks, which I'll talk about in a little bit, so the banks have access to the consumer. Then you have hedge funds. They're just trying to manage money, man. They're just trying to make money for their clients. But they're going to interact with the market very differently. Then you have the banks who are trying to facilitate order flow, like, hey, we're trying to get money from this bank. We're buying up this asset. We're selling up this asset. Your conversion rates, like if you're traveling the world, well, banks are where you pretty much, if you want to trade your dollars for euros or for pounds because you're an American traveling the United Kingdom, they're trying to facilitate that. Then you have corporations. These are people that are doing, under the radar type of deals where like, hey, Sony wants to buy this type of company. They're trying to buy Sony's trying to buy an American company. It's a Japanese company trying to buy an American company, but they need to trade their Japanese yen for American dollars. Banks are going to help them facilitate that. If that makes sense. So all these entities have their own motives for interacting in the foreign exchange market, but in some weird way, shape, or form, they all work in this beautiful tapestry together to make this shit happen. And last but not least, let's talk about the retail space. The retail space is essentially dumb money. It's either you and me as a retail trader, you and me, or typically high net worth individuals. People who, have a bit of money at hand. People who are maybe retired. People that just got some fucking money to blow. They want to try their hand at the market. That doesn't make them better than the next guy. So that's pretty much it. You have smart money, dumb money, big entities, the retail space. Every one of these players is going to have their own objectives. Now let's talk about what the fucking problem is. The retail space is taught to trade against the goddamn ocean. The Fed, central banks, hedge funds, banks, corporations, algos. Dude, in the foreign exchange market, the Forex market is the biggest global liquid market in the world. So do you think even if you had $100 million in your trading account, you do not make a blip in the volume? This market trades over $5 to $6 trillion a day. That means this type of money is moving through banks, entities, corporations, country to country, $5 to $6 trillion a day. That's with the T, trillion. Dude, even if you had $1 billion, you cannot move the Forex market. The people who move the markets are, once again, these big players who are trading tens of billions, hundreds of billions, trillions of dollars a day. So, by virtue of the fact, do you want to trade with them or do you want to trade against them? I'm going to teach you how to trade with them. Because I know I don't have the money to move the market. So why the fuck am I going to trade against them? And these people leave specific footprints, right?
Yep.
I don't want to trade against the ocean wave coming at me, bro. I want to surf the crest, bro. I want to surf that nice little wave. Once again, it goes back to my example. Do you want to climb uphill or do you want to swim downhill? Which way do you get to your destination faster? Downhill, right?
Yep.
Not uphill. That's the essence of this game. Learn who the players are, learn why they're interacting, and learn the footprints that they're leaving behind so you can exploit that. So you could take advantage of that. So that, in essence, bro, is the basics of markets. And I'm going to explain the last final thing that is going to piece everything that we talked about together. Let's talk about the purpose. So we talked about behaviors of price, the Holy Trinity, basically how markets technically function. We talked about the players in the game. Last but not least, we're going to talk about the purpose of the market. And this is so important. This is going to tie up to everything that we teach. Purpose of markets. And there's only 3 reasons why, or 3 elements to how the markets function. Function number 1, to facilitate order flow. Function number 2, to facilitate liquidity. And last but not least, to manipulate. And I didn't understand this when I read Adam Grind's book. The markets are designed to hurt the greatest number of people. If you don't know what you're doing, that is. This is not a fucking charity case. You're not supposed to come in here and just start making money like clockwork. The markets are not designed for everybody to be winning at this business. They're designed to take your money. But that doesn't mean the game is not winnable. You can win the game. Now I'm gonna show you out. Like I said, I'm gonna get to this in a little bit. We're almost there. The game is winnable, but the problem is most people don't understand that this is not designed for you to win. So understanding that, you'd be surprised at how many people continue to put their hand in the fire, even though when they know it burns. They continue to apply things that don't work in the fucking markets. Oh yeah, bro, let me slap on a moving average. Let me put on a MACD. You know, when the RSI says 70, oversold or overbought, I know I need this stuff doesn't work, man. It's been accounted for, it's been done, it's been tested. That ship has sailed already. Markets are so mature. They're so mature and so sophisticated that what once worked does not work today. And you need to constantly adapt. I don't know if what I'm teaching you is going to work next year. But you know what? When you have the skill as a trader, you are going to adapt. Because you understand how the markets work. So if you understand how they work, and that will never change. That is never going to change. What might change is maybe how you interact with the markets. But what's never going to change is how the markets function. And understanding that, all you have to do is adapt year after year. And let me give you a good example of this. Chris and I, we used to be masterful shorters of the markets. We used to short the markets like nobody's business, and we used to make a lot of goddamn money. And then when 2020 happened, overnight our edge changed. We were losing money, bro, consistently. And we didn't understand why. Up until and here's the thing, we could have kicked rocks, sucked our thumbs, and been like, oh dude, you know what? Maybe we don't know what we're doing. We just keep losing money. We don't know what's going on. No. Chris and I, we would mastermind, bro. And we were like, dude, what the fuck is going on, dude? Like, we were shorting before. The setups that we were taking, we were shorting, were working perfectly fine. What the hell happened? Well, we understood. A lot of liquidity that was injected into the markets via money printing. So that created a lot of volatility in the markets. And that volatility fucked up our setups when it came to shorting. So when we used to short, for example, we had what we refer to as sell week templates. We would get a 1 push, 2 push, 3 push, and then boom, breakdown, marginally higher high, and then boom, collapse. And then you would get a pullback return move. And this is where we made our money. Now you don't get that. What you get is when you sell off, you get a swing, and then you just push, and then push, and then sell off. And sometimes you don't even sell off completely. You just keep ripping higher. Shorting was no longer profitable for us. But rather than crying about it and be like, oh, dude, we just don't know what we're doing. We don't know how to make money. And it's just trading is so hard. We were like, what the fuck is going on? What happened? What is so wrong? Why are we not making money? We eventually changed our strategy and adapted to the markets. And we found out that shorting was such an inefficient thing to do because of the lack of liquidity in the financial markets. So we ended up finding out that maybe we need to learn how to buy markets. Maybe we need to learn how to long markets and develop setups over that. And that's what we've been doing. And that is what is making us a lot of fucking money. If you look back in our trading Discord, bro, 99% of the trades that we take, they're on the long side. We just buy markets. And we make a fucking killing do it. We rarely short markets. Because it's an inefficient thing to do. And that makes trading so much easier for us. Because we know what we need to do. We know what we need to look for. That's my problem with ICT or all these other concepts. They're trying to teach you to trade everywhere. But sometimes you just need to specialize in one fucking thing. If you can specialize in one thing, that is how you're going to make money. And what we specialize in now is longing or buying markets. And I'm going to show you why. So anyways, the market's purposes are to facilitate order flow. What is order flow? It is simply the interactions between buyers and sellers. That's all it is. That's order flow. If you want to buy something, somebody has to be willing to sell it to you. If you want to sell something, somebody has to be willing to buy it to you. Brokers help with the facilitation of that process. Hence is why they charge you a small commission or a spread. In the Forex market, it's called a spread. But all it is a commission. That's all it is. The function of the markets is to facilitate order flow. Order flow is the interactions between buyers and sellers. The second function is to facilitate liquidity. What is liquidity? It's money. That's all it is. Liquidity is money. The markets cannot move from A to Z if there's no fucking liquidity. If you want to buy, but there's nobody willing to sell it to you, there's no liquidity. The markets need to facilitate that. And vice versa. And last but not least, the most important element of the markets, and sadly, it's just a function that happens, but it is a necessary evil. Last but not least, it is to manipulate. The markets are heavily manipulated, man. When you want to make some fucking money and you want to make big boy money, this is just something you have to accept. All markets are manipulated, and I will show you what that looks like, but all markets are manipulated. It's just a necessary evil. For example, if you're a big institution and you have hundreds of billions of dollars that you need to deploy into the markets, you don't have the easy accessibility that us as retail traders have. Dude, we can enter and exit the market within seconds because we're not trading massive size. Even if you had $100 million, you could enter and exit with relative ease. Big institutions don't have that luxury because they're confronted with spreads and volume or liquidity. So for a retail trader, let's say you have $1,000 in your account. You could enter the market and exit easily because there's always going to be a counterparty to your transaction. If you want to buy something, there's always going to be somebody willing to sell it to you. But when you're a big institution and you're trading hundreds of billions of dollars, now we're confronted with scalability issues. Bro, once again, this goes back to what we were teaching in the beginning. If you want to buy something, somebody has to be willing to sell it to you. Well, if you want to buy $100 billion worth of an asset or a stock or a currency or a company, who the fuck is going to sell you that? Nobody. So what market makers need to do is they need to manipulate price to make it look like it's going to do a certain thing to induce traders to react a certain way. What do I mean by that? So let's say you're a big institution and you need to deploy a contract because you're on a time limit. You need to deploy $100 billion of whatever contract, right? You're trying to invest money. There's an acquisition and mergers trade going on, whatever. So what big institutions will do is that they'll often manipulate price. Remember, if you want to buy something, somebody has to be willing to sell it to you. So what they're going to do is they're going to create price action that induces retail traders to go short. What are you doing when you're shorting the market? You're selling. If you want to buy something, somebody has to be willing to sell it to you. So they're going to manipulate the retail trader to sell the market. So these guys, the big boys, can fucking buy as you're selling the market. So you might get a little range, and then you get a little breakdown, and then that is when big institutions interact, and then boom, you get a massive reversal. So you're either taking the trade in the wrong direction, or B, if you're taking it in the right direction, your timing is off. Let's say you're a buyer. Okay, let's say you're a buyer. And you're getting it, the market is trending up, and then you find reasons to buy the market. You have a range, high, low, etc. Let's say this level is holding. You as a retail trader, you're taught to buy at levels of support, right? I'm sure you've learned this, bro. Support, resistance, etc. You're taught to buy at a level of support. What happens there is that you see that level holding, and then you place your stop orders at obvious levels. Oh, I'm going to put it 10 pips away from entry, 20 pips from entry, or I'm going to put it at this key level of structure. The algorithms know that. The big players know that. So what they're going to do is that if they need to deploy orders, they need to, boom, flush the fucking market out. They need to stop you out so they can get in at available, cheaper prices, at attractive prices. Because when they stop you out, that is liquidity. That is money for them to deploy big orders. And then you watch the market move in your favor. Bro, in the 4 months that you've been trading, from what you've told me, it hasn't been that good of an experience. How many times have you gotten stopped out only to watch the trade move in your favor?
Many times.
Many times, right?
Many times.
It's because of what I'm fucking telling you. It's because of what I'm telling you. This process of manipulation happens over and over and over again. And let's say the market breaks down. Short-term traders are going to see that, oh, well, this is a great time to short the market. And I'm going to place my stops here, and I'm going to place my stops here and here. So everyone gets fucked. There is no free lunch in this business. But that's what I need you to understand. Okay? So in a nutshell, bro, that is how the markets function. That is the foundations, the elements, the variables of what make up the financial market. Now let's get to the good stuff. Let's talk about how we make money. And I promise you, man, if you learn this, you are going to just expedite your learning curve, and you're going to get straight to making money. So as I mentioned earlier, bro, I'm a short to medium term discretionary quantitative and technical currency trader. I specialize in order flow analysis, liquidity manipulation, i.e. stop hunting, as it's commonly referred to, any and all of the covert and deceptive tactics that these big entities, big operators, and algorithms are utilizing to manipulate the retail trader out of the money. And a very core component to my trading methodology is to scope in on lower time frames to identify very expensive, volatile, and trading price behavior so I can maximize my reward relative to the risk that I take. In a nutshell, if I were to dumb that down, that means I'm a reversal specialist. But let's break this down, bro. So we just talked about that over 85% of breakouts fail. We talked about that we primarily long markets. We talked about markets are very manipulated. And we talked about that the markets are always trying to trap traders in the wrong direction. This is the essence of how we build what we do, right?
Yep.
So the markets, what we do, man, is we're essentially looking to buy key reversal points or areas where the market is likely to reverse. So what we look is for downtrending markets. We need to see markets that are trending down, and we need to see significant lows being formed. There are, and at that point, we know that every time a low is breached, you're likely to get a reversal. You're likely to get a sharp bounce. Now, it could either be a full-blown reversal, a long-term reversal, or it could be a temporary reversal where you just pull back and you have two swings and then you continue down. The point is that we are looking to enter when significant lows are getting breached. This is our entry criteria. When those significant lows are getting breached. Now we have a specific filtering process for that. How do we filter that? Just because the markets are breaking down, that doesn't mean we're buying up the market, because, dude, the market could continue to sell off way longer than you have money to afford to hold that trade. How do we identify key areas where price is likely to have reversals? Well, let's walk you through our filtering process, bro. We have specific things that we look for. So first and foremost, we look for a downtrending market. We need to make sure that there is a significant weekly, daily, monthly low that was established. And then we look for specific structures. So you need to understand, reversal structures look very specific. When a low is formed, you're either going to get what we call a type 1 setup. This is what we call a type 1 setup. It looks very specific. Looks like this. The market is trending lower. Price breaches that low. It puts in that low. And then it breaches that low. And then boom, pops higher. You get a break of this structure. Break of that structure. And then you'll get a pullback return move. And then continuation. What's also impediment to our process is that we need a grind line break. I'll literally show you this in real time before we end the meeting, because I know we've been on here for a while. But I need to understand, there's specific things that we look for. We have a specific filtering process that lets us know that this trade is going to work out on balance probability. So we have what we refer to as a grind line break. We have a significant daily, weekly, or monthly low breach, and then we look for a type 1 setup, meaning it puts in that low, and then it puts in that lower low, and then it snaps back very hard. Breaking that structure, if we get a pullback return move, and then another grind line break, even better. That's an entry criteria where we can get in with a very tight stop, very tight entry, and then we take targets at the midpoint and at the high, and we make our fucking money. And that can happen literally within a day, an hour, 2 days, whatever. The point is that we understand why that works. There's order flow behind that. Why? Because short sellers are getting trapped.
Yeah.
When that low is breached, short sellers are taking shorts there. And we know where they're placing their stops at very obvious levels of structure. So when price fails at that low, you get a short squeeze setup. Another template that we have is what we call a type 2 setup. This is a type 2 setup. It's a low, and then a higher low, and then you break structure. Pull back, continuation, and then it has this little slant, a little slant right there. And then you wait for another grind line break or a little funnel setup, and then boom, it's off to the races, and you trade from there. And these setups have geometric targets, so the length from that current neckline to that low provides you a geometric target where you know you could take profit because of that short squeeze setup. It's algorithmically programmed. And then we have a type 2 variant. So it's still a type 2 setup, but it's a variant. What do I mean by that? Type 2. So it puts in that lower low, that higher low, breaks that neckline, and then it comes in for one more clean swing. And then it has a parabolic move high, or a lot higher. This is another template here. If you see this, you need to buy the markets. You need to be long. You need to be long. So much volume got flushed out and got trapped at those lows. We also have a type 3 setup, which most of the retail space, they call them W bottoms, double bottoms, W's, whatever. But they look like this. This is a type 3 setup. We don't trade them often just because they're unreliable and they don't offer a lot of reward to risk. I'm trying to take trades that offer high amounts of reward relative to the risk that we take. So, for example, in this case, a type 3 setup will look like this. It'll look like equal lows, double bottoms, and then you'll get a break of a neckline, and then that's it. The length, the width of that that low to that neckline provides you maybe sometimes a 1-to-1, maybe even lower. So that's not what we're looking for, man. We're looking to take high probability trades with high rewards. That's what we're looking to take. So that's why we don't trade type 3 setups very often, but they are good reversal structures. They let us know that a bottom is forming. That is why you need to learn them. But we don't necessarily trade them. Usually when you get a type 3 setup, sometimes you might get a break and price is trending higher, and then you get a little funnel setup. And then it provides your target. So I will show you that. And then we get inverse head and shoulders. These are what we call geometric structures, where price is trending down, and then you get a shoulder, lower low, something like that, break, flush, and then boom. And then the geometry of that neckline to that low provides you a geometric target where price is likely to go. So you have a high conviction of where you need to take your money and where you need to exit in the event that you're wrong. So that's another setup. It's what we call an inverse head and shoulders. Because it looks like a head and shoulders. So it's a shoulder, head, shoulder, boom. These are very reliable setups. And last but not least, this is our bread and butter 90-10 setups. And this is where we're going to close out the meeting in a little bit. This is how we make money. And then I'm going to go over these examples, bro. And if you go in my Discord, there's countless examples of these shit. But this is our bread and butter moneymaker. They're called volatility compression funnels. So you'll get a trending market to the downside. You'll get that low. Then price will breach that low. And then price will snap back higher, and then the volatility starts to compress. And it starts to ebb, and it flows, and then it contracts. And then you get structures like this. And then all of a sudden you pop, and then you fucking parabolically rip the targets. The geometry from these impulse moves and at a key level, which we just talked about, will give you the geometry of where price is likely to go. This right here is our 90-10 bread and butter, high probability money-making setup. That's how we fucking make money, dude. With a grind line break, breach of a significant daily, weekly, monthly low, reversal structure, and then a volatility compression funnel. Oh my God. Danny, please tell our friend right here that this is how we make our money. Please tell him that this is what we fucking trade.
Yeah, for sure. And you definitely have like a lot of like templates or pictures you share on the Discord, and they always play out the exact same way how you show it there.
I appreciate that, man. Let me see if I can actually pull up. Hold on, give me a second. Let me see if I can pull up the channel. You guys can't see it. You guys can't fucking see it. All right. Well, either way, bro, there's a tab in our structure. If you have the chance tomorrow morning or after our meeting, go. There's a tab that's called High Probability HVF Structures.
Oh yeah, I
It's
see
the
it.
last. Yeah. It's the last tab there. I want you to study all those fucking charts, bro, and tell me. Look at how they play it. These are all trades that we've taken, and 90% of them have performed to targets. It made us money. That is what I want you to train your brain to see. If you could just learn this, you will make money. It's these volatility compression funnels where price will have those expansive volatile moments, and then they start to compress. And then boom, they pop, and then they fucking move. That is how we make money. Case in point, let's look at the euro. We didn't take this trade, but it's worthy to note that our setups are there. Volatility, compression funnels. You get those highs, those lows, those highs, those lows. Volatility compresses. The length of this impulse gives us a geometric target. And look how price broke out, pulled back, and it's on its way to target. Let's look at the dollar CAD, which we made a lot of money from this week. Volatility, compression, funnel. I cannot make this up, bro. Literally, what did I say? Grind line break. You need a break of that short-term downtrend. You need a breach of a significant weekly low. Over 85% of breakouts fail. Look at that. Look at how this breakout failed. Short sellers have their stops here, here, and here. You got a breakout, pull back, return move. You got compression. There's your setup. We entered here, and then boom, it's on its way to target. Then we're getting another wind-up structure. We're already in this trade, man. If you go through my Discord, you will see that we're in this trade, and we're making fucking money from it. We called this in real time before it happened. All my guys are testimonies to this. Volatility compression funnels, they work. Take a look at the dollar peso. Let's get rid of that. There's our funnel. Grind line breaks, and then you wait till you see a funnel. We didn't see a funnel down here, but we were getting consistent grind line breaks, and then you got your funnel, and then look at that fucking move, bro. There's your target, but look how it overperformed. That is how you make life-changing amount. Bro, you could make rent money. This is rent money. EuroCAD. We already took this trade a long time ago. If you go back to my Discord, you'll see that we actually took this trade. We didn't obviously run it to targets. But here's the funnel. Here's your key level. What we just talked about, the Holy Trinity. Your key level, key round number. Look how price reacts at that key round number. Breakout, pull back, continue. And you take the geometry of the impulses. So from this high to that low, you put it on your price splitter, and then it gives you a realistic target where price is likely to go. Oh, well, look at that. Look where price went.
Right there.
Make fucking money, dude. This is just so simple, man. We could teach a stupid monkey how to do this. It's not that hard. Pound CAD, same thing with the pound. Obviously, this was more of a macro structure, but the setup was there. There was just a lot more manipulation on this trade. But there you go. Your volatility compression funnel. You got your breakout, pullback, and then continue. And we're almost to target. This stuff is algorithmically programmed to the markets. If you can just study this and just learn this, I promise you, man, you have to make money. Euro Aussie, we're already seeing one in the making. We're probably going to go long this tomorrow. We're probably going to buy this trade tomorrow. But same principles. Grind line break, significant lows breached, volatility compression funnels. Here's your type 1 setup. Look at right here. What did I just say? Look at that. Lower low, breach, break, continue. Look at that. Lower low, break, pull back, continue, and then boom. Now that doesn't mean you just start taking the trade. You gotta wait. That is confirmations that a low has been formed. Then you wait for the magic, baby. Look at that. Volatility, compression, funnel. Then look how price reacted. It broke out, pulled back, and it's on its way to target. We look to enter here, man. These trades offer massive reward relative to the risk that we take. Euro New Zealand, it's getting there. We're actually long this trade, but we need to see how price is going to react soon. We have a kilo here. It's either going to break out, false break, and then it's going to provide us a little funnel, and that is where we will look to go long, and then we will probably see a grind line break. But we're in this trade already. We've been timing the lows here. So, in a nutshell, man, that is how we make money. We have a very specific filtering process. It's very simple. We trade the extreme points of price. We wait for confirmations in terms of reversal structures and shoulders, little double bottom. We wait to see this to let us know that price is bottoming out. And then where our trigger, where we take our trades, is when we get a break. Oops, give me a second. Where we get a break of that neckline, break, pull back, and then volatility compression funnel. After you get a grind line break, I just showed you examples of this. Go back into our Discord, study the high probability HVS structures, and you will see this over and over and over. We cannot make this stuff up, man. We legitimately make money from what I'm talking about. But anyways, we will save this for another meeting. I think this was a very productive and successful meeting. We've rambled off for damn near more than 2 fucking hours, to be honest. But I think this was great. Yeah, before we call it a wrap, man, Fabian, how was your first time with me, man? I genuinely want to know. How was your experience? Do you feel like you're going to get value with being with me?
Oh yeah. Never heard of these things before.
It's easy, right? Did you hear me talk about fair value gaps? Fucking
No.
order block. That shit doesn't work, bro. I'm telling you what works in the fucking markets. And I make money from this, man. All of our guys make money from this. And I hope that this excites you enough to dedicate yourself to this craft, bro. Is there any questions that you have for me? Anything that we've discussed that maybe is obviously, like I said, it's a lot to digest. Keep attending the meetings, and I promise you it's going to be second nature. But do you have any questions that I can answer for you? Any concerns? Do you think that we'll see you as a long-term member in our family?
Yeah, I think so. I've never been in a place where there was a lot of values in here. Well, if I gotta look through my experiences, because most of the times I was stuck in courses, you know.
Yeah.
things you follow, and then you get to an end part, and then you're like, okay, followed all this for, and you don't really know where you're going, right? But with this one, explanations were pretty clear. And one of the things is you went straight to the point, you know. That's
Yeah, yeah.
that's something I didn't really experience back then because a lot of people they teach you things that you don't really need to know. I mean, they'll probably point it out, but it's like they're giving you chapters on it like you really need it. And in my head, there's so many things I learned, and I'm like, what did I get to learn all these things? Fair value gap, the auto blocks, all these crazy things.
It's just a waste of time, man. It's a waste of time. It's stuff that doesn't make you money. What I'm teaching you, I've back tested over my 10-year career, and it makes us money. I promise you, man. Give me a month. Give me a month, and you will see that what we do in real time it's unreal. It's like nothing you will ever experience or nothing you've ever experienced before. You're going to see me make calls in real time, call these trades, and then when you're ready to start risking real capital, I don't expect you to start risking capital with what we're teaching right now because you need to get used to it.
Yeah,
Now,
that's
if
one
you're
of the
ready
things.
for it, yeah, if you're ready for it, by all means, we'll talk. We'll set up a one-on-one. We'll talk about how much money you realistically have to trade with. Like you said, right now you're in a very fortunate position where your dad, he supports you in a lot of your endeavors. Man, that is a phenomenal situation and blessing to have, man. I wish I had that. But the fact that you have that, value it, take advantage of it. And if your dad is willing, like I said, give you a little bit of capital to trade with and actually learn this, we'll talk then. We'll talk about like, hey, let's say you got $1,000 to $2,000 to trade with, or $5 or $10,000. It's not a big deal. The point is I need to know what realistically you have to trade with, and then we could set up a strategy that's going to be consistent for you. Like, hey, bro, you need to risk 1 to 2% of the account, or you need to risk X dollar amount, or this is how we trade and stuff like that. And just monkey see, monkey do, man, and you will make money. I promise you
Yeah,
that. If you're not
yeah,
making money, it's because you're doing things that I'm not paying attention to.
yeah,
The only people in my Discord that are not making money are guys that are literally sabotaging their own results. Because I'm very transparent. You could literally ask Chris right now that you have him. Everything that I do, I am transparent from the moment I enter the trade, from how I manage the trade, from the point of exits, whether that's targets made, money locked in, or whether I'm wrong. I am transparent every step of the way. If you do what I
really
do, you
appreciate
just
that.
have to make money, bro. You just have to.
Yeah, I
I
really
mean, am I
appreciate that.
wrong or am I right, Chris?
Totally correct. Fabian, I guarantee you, if you spend 30, this is how I started. I would spend at least, well, I did an hour, but spend 30 minutes a day dedicating just your time, complete focus, turn off your phone, do everything, and just look at some charts. You have so much information available on our Discord that you can just go back and dive yourselves in. If you create consistency with trading or learning trading, but adding it to your life, because I understand that you have shit to do throughout the day, and there's days that you don't feel well, but just devote yourself and give 30 minutes of your time to this in a month, and you're gonna be a whole completely. You're gonna see this video a month from now and be like, God damn, I learned so much in just a month. Um, so just create a sense of consistency of in trading with your life. Whenever you can, do, put your head in the books. With our Discord, not necessarily some books, but spend some time and create consistency in doing this every day. Me and Dave, we do this. We literally wake up, look at charts. It doesn't even seem like I'm even trying anymore. I'm so this is just part of my life now that I look at charts nonstop. That I don't even have to create time for it. It's just part of my life now. So make trading part of your life, and I guarantee you're gonna get the results as long as you put the work for it. And keep your process as simple as possible. There's so much information available to you, and you will get things that other members may not get. And what we teach you, try to create a plan with your personality and write shit down with what works, what doesn't work. You heard me earlier that you have to treat yourself as a professional. If you don't
Yeah,
treat yourself as a professional in trading, you're not going to make it. You may have some good trades here and there, but sustainability long term, you're not going to be able to do it if you don't conduct yourself in a professional manner. Write shit down, create a journal. In the beginning, it's kind of a lot of repetitiveness. You'll notice at every meeting, we talk about the same shit nonstop, back and forth. But that's really what trading is. It's very boring.
Yeah.
Um,
Yeah.
but if you're very good at this, the reward is money. So fall in love with the passion of growing and understanding trading, and you'll have money come to you as long as you fall in love with trading first. Money is just happens to be the reward for being good at trading.
Yeah, thanks for sharing that, Chris.
Yeah.
Yeah.
Absolutely, man. Well, this has been, I think, a very productive night. It's been a long night. It's very late for all of us, I'm assuming. So let's go ahead and call it a wrap. Let's go ahead and have a great rest of the night, guys. I appreciate for all.